Hi everyone, good evening and namaskaram. నా పేరు కారుణ్య రావు అండ్ ఎవ్రీ వారం మేము వస్తాం ఎవ్రీ ఫ్రైడే మీకు మార్కెట్స్ గురించి చెప్పడానికి ఎలా ట్రెండ్స్ ప్లే అవుట్ అవుతున్నాయో ఎలాంటి స్టాక్స్ డిమాండ్ లో ఉన్నాయి, ఏ స్టాక్స్ ఎక్కడ ఎక్కువ ట్రాక్షన్ ఉంది. కానీ ఇవాళ సాక్షి మనీ మంత్రాల్లో కొంచెం డిఫరెంట్ గా మేము మాట్లాడతాం. 31st జులై డెడ్ లైన్ వస్తుంది ITR ఫైలింగ్ కోసం. సో ఇవాళ మాతో ఒక స్పెషల్ గెస్ట్ జాయిన్ అవబోతున్నారు, Mrin Agarwal from FinSafe. She is here to help us out with everything that we need to know about last minute ITR filing. Mrin, thank you so much for joining us.
Thank you, Karunya.
So, first and foremost, I'm sure a lot of people would have asked you, Mrin, which tax regime to opt for, because finance minister earlier this year did say that now the new regime by default will be the one that everybody will have to follow. If you don't wish to do that, then you have to state otherwise. So I'm sure this is a commonly asked question for you. What have you been telling your clients and people asking you this?
Whatever regime you might have declared to your employer, you are actually allowed to file your ITR on the regime that works for you. So as a salaried employee, right, you have an option to change the regime versus what you've declared to the employer at the time of filing the ITR. Okay. But if you are a self-employed person, then you can change this regime only once, and after that you'll have to stick to this regime. So if you're filing ITR 1 or ITR 2, you can choose the regime that works better for you. For those filing ITR 3, ITR 4, they're allowed one change, and after that they have to stick with that regime itself.
Okay, but is there a case for where if you're above a certain salary bracket, you should opt for the new regime or the old regime, or is it a myth?
I think it's really dependent upon, what are the deductions that you have. Of course, typically I have seen that for people with incomes above 12 lakhs and who have home loan deduction and other deductions, the old regime works out better. But there is a calculator on the income tax website that you can use to figure out which regime is going to work out better for you.
Okay. And what are the incomes to be declared? Because if we look at the new regime, is there anything different that we need to know before we file our taxes? I mean, this is very last minute, so help these people save some time by telling us what are the new additions or tweaks here.
So I think what is very important is to declare all the incomes. Very often what happens is that people feel that we don't need to declare the smaller incomes. Like today itself, I got a query from someone saying that I just got 1,000 rupees dividend. So do I need to declare it, and is it taxable, right? So first and foremost, please ensure that you declare all incomes. Of course, you have income from salary, maybe income from rent, right? That will come under income from house property. Your income from other sources will be dividends, interest income, bank interest income, for example. So very, very important. Even if you have tax-free incomes coming in, please declare it. Even though you don't need to pay tax on it, you still need to declare each and every credit or every income that has basically come into you. And that is very, very important. So the difference in the old and the new regime on this is really, there's no difference over here on the regime that you choose. You still need to declare all the incomes. I think the difference really comes in the old and the new regime with respect to the deductions.
Okay. So that's fair, but let's talk about HRA, house rent allowance, which you had briefly touched upon. Many of us, I'm sure, have done this little tweak or little, jugaad, I would say, wherein the taxpayer might be staying with his family or in his own house or with his parents and wants to claim HRA for for an apartment that is rented by their parents. Firstly, is that allowed? And secondly, how does that work? Because a lot of people are trying to get around that whole HRA benefit and they want to save some more money from their salary.
Yeah, so I just want to tell people to be really careful because just recently I read this information that using AI, the IT department is actually cracking down on people who have taken in wrong exemptions without having the right documentation. So,
Hmm.
firstly, on HRA, you can only claim HRA in the city that you work in and in the house that you have rented in your name, right? So, for
Hmm.
example, if your parents are living on rent in a house and they are paying the rent, you cannot claim HRA on that. Okay. Secondly, if you are staying with your parents and you are paying rent to your parents, yes, you can claim it under HRA, but you need to have the right documentation. And the right documentation is the same way that you will do with any other landlord. You need to have a properly stamped rent agreement. You need to be paying the rent every month, preferably electronically, because so that there's a trail to show that the rent has been paid. And very important, the parent needs to be offering this rent received as income from house property and paying tax on it, right? So if all of these conditions are met, then you can pay rent to the parents. Or if you're paying rent to the parents, please keep in mind that all of these conditions need to be met.
So even if the parents are not uh, seeking any benefit of HRA, it's not like it can be transferred to the child.
No,
The
no.
documents have to be in their name.
Yeah, yeah.
Okay, all right. Before we move on, I just want to flag off to our viewers also. మీకు ఏవైనా questions, queries ఉంటే tax related, please మాకు comment section లో మీరు పంపించొచ్చు. మేము address చేస్తాం and Mrin will be happy to answer your queries and questions. Um, Mrin, what about last minute? I mean, people could be traveling, they could have some exigency, emergencies. What if they miss this 31st July deadline? I mean, what is ideal is that you fill it up well in advance. But I mean, many people are busy and they're just running around, and despite wanting to do so, they might not be able to meet the deadline. So what happens next? I mean, is there immediately a penalty that's levied on me, or can I still make up for that error?
Well, you should try to file your returns by 31st of December. There will be a small penalty that is going to be applicable, but you should try to file your returns as soon as possible.
And what will be that, to what extent, the penalty?
I think the penalty is 5,000 rupees, if I'm not mistaken.
Okay. Okay. And what about filing capital tax gains? Because that is also very tricky, and a lot of people find it very cumbersome to calculate, to see your whole P&L of the whole year, and different, some people have done SIP, some are, directly investing in the stock market. So, how should you go about that? What is the process, and what's the easiest way to break that down?
So, first thing, if you're earning below 50 lakhs, but you have a capital gain or loss from the sale of shares, mutual funds, or property or gold, right? You need to file ITR 2 because ITR 1 doesn't have a provision to file capital gains. If you're just holding all of these and you've not ever sold them and there's no gain or loss, then you can still file ITR 1. But if there is a gain or a loss, you need to file ITR 2. So that's point number 1. Point number 2 is that typically calculating this on your own is quite difficult, but there is help at hand. So if you see, for example, for shares, or for mutual funds, you can get it if you've done mutual funds through your broker or through your trading account, and you can get a statement from them. Otherwise, you can get on to CAMS and Carvi website. There is a section for investors where you can ask for a mail back of capital gain statements for the previous financial year. You'll have to do this separately for CAMS and you'll have to do this separately for Carvi, right? So, in terms of getting the capital gain statements from for share transactions done, or for example, fund transactions done, you can get it and use this information to file the capital gains.
If I have invested in a tax saving SIP and it's been 5 years or 6 years, whatever lock-in period, and now I'm finally withdrawing it, do I still have to mention that? And are there any, obligations there?
Yes, of course, because it's an equity fund, and equity funds above 1 year are taxed at 10% over a gain of 1 lakh. So the whole point is that, the taxation aspect, the amount of tax that you pay is different. But the point is,
Hmm.
there is a gain, so hence you do need to mention it.
Yeah, but it won't be taxed, right? It'll still be tax free. Just, to
Oh, no,
reiterate to our viewers.
it
Yeah.
is an equity fund. So if the gain is above 1 lakh rupees, then there is a 10% capital gains tax.
Okay, so that's something that everyone, should keep in mind. Since we're talking about investing in stocks, there's ESOPs and RSUs as well. So will that also be filed under the same ITR too that you're talking about?
Yes, and in fact, more than ESOPs and RSUs, foreign stocks. So, for example, if you have
Hmm.
bought foreign stocks yourself and you own foreign stocks, so again, even if you are not liable to file income tax if you come below the exemption limit, but you own foreign stocks, you need to file ITR too. Okay. Again, if your income is below 50 lakhs, but you own foreign stocks, you need to file ITR too, right? Because ITR 2 is the one that has the sections pertaining to foreign stocks. Now, when you own foreign stocks, there are some additional sections in ITR 2 that you need to file. For example, there's a schedule of foreign assets, Schedule FA.
Hmm.
If there is unlisted equity, there's page S, there's S2 as well. And then if there are dividends that you have received on these foreign stocks, they are liable for to be taxed fully in India. And if there is a withholding tax, then you can claim that withholding tax credit. So, there are actually about 4 to 5 extra sections in ITR that you need to file if you're holding foreign stocks. And I would highly recommend that you please do this through a chartered accountant, because honestly, fill up some of these sections on your own is very, very difficult.
I mean, definitely they are. And if somebody like you were saying it's difficult, then, think of everyone out there. But what happens if I make a mistake in these forms and I've submitted it and somehow later somebody cross checks and, figures out that, okay, there has been a problem. Can we rectify it, and how soon should we do it? And again, will I be liable to pay some penalty for this?
Yeah, you can rectify it, and you can refile returns now up to 2 financial years. But the point is that depending on when you do it, there is a penalty, there's additional tax that's payable. And certainly, one of the reasons why I'm recommending, especially those who are filing ITR 2, to please do it through a CA, is because if you are getting notices for wrong filing or for underpayment of taxes and all of these cases, the refiling itself will mean that there is going to be a tax penalty. So why go through all that? You might as well spend some money and do the tax filing correctly in the first place, rather than getting into problems later on.
Makes sense. Since we were talking about tax saving mutual funds, there are also insurance proceeds. Some are tax free, some aren't. So what happens? How do we file that?
Yeah. So, for example, if the premium is more than 10% of the sum assured, then the returns are fully taxable. It will come as income from other sources. Similarly, for example, if you're holding more than 2.5 lakhs, if you've invested, more than that in ULIPs, for example, then those proceeds are also going to be taxable, I think, as capital gains. So, you have to keep all of these things in mind and check all of these things. You can't just assume that any insurance redemption procedure is tax free. You have to check all of these conditions before you actually do your tax filing.
Yeah, that's right. And ULIPs again, ULIPs also fall under this category, right?
Yes, yes.
Okay. And let's say I have two PPF accounts, one in my name and one in a minor name. Can I claim ATC benefit for both?
No, you can't. So you can have two PPF accounts. You can have one in your name. You can have one in the minor's name. But the maximum amount that you can claim under ATC among all the ATC investments. So you might have employee provident fund, insurance premiums. You might have some existing insurance policies. and you might have VPF also, the total that you can claim put together is only 1.5 lakhs, even if you've invested a higher amount. Or all I'm trying to say is that you have the ability to invest how much ever you want or within the prescribed limits, but what you can claim for ATC is only 1.5 lakhs.
And the same applies to home loans, right? Even if there are co-applicants, does that make any difference?
So, very interesting. If there is in a home loan, if there are two co-applicants, both can claim the Section 24 benefit up to 2 lakh rupees per year, provided again they meet certain conditions. One, both of them are the co-owners of the property, right? Secondly, both of them need to be paying the EMIs, right? And you can only claim proportionate to your contribution to the EMI. So if you're not contributing, for example, 2 lakhs EMI in a year, you can't claim 2 lakhs. You can only claim proportionate to what you're contributing. So these two conditions are really important. You need to be the co-owner of the property and you need to be contributing to the EMI as well.
Okay, makes sense. Any last minute tips for those of us who are still struggling to fill in and submit, and and even for future planning? I mean, it's not like it's just this time, it's a regular exercise that we have to keep doing on a yearly basis. So should one prepare a checklist? What should it look like? How should they get started? Because a lot of people, even if they have a simpler looking, income statement, get a bit worked up when it comes to filing taxes, and it just sounds very complicated.
Yeah, so I think again, I would say that if this is not your cup of tea, if you find it very difficult, and I do see people using a lot of DIY portals and filling in wrong information, so honestly, again, I would say find a CA. There are lots of CAs around it you can find, and find a CA and take a CA's help to file the taxes. Now, the other thing is that you can take a CA's help, but the CA would also need documents, right? So what are the documents you need to prepare? So one, of course, if you're salaried, you need to have your Form 16, whatever 6A deductions you're taking. So for example, ATC deductions, whatever you're taking, you'll have to take ATD and all of these things. You'll need to, of course, have the proofs of all of that. You'll have to provide capital gain statements. You'll have to provide your bank statement, and you'll have to provide an explanation of all the credits in the bank statement. So you have to, of course, do all of this paperwork on your own. And that is why it's always better that, just, try to do this actually in the month of June or beginning of July, not, when we're so close to the filing date. Now, one more very important aspect is to look at the annual information statement. It's available when you log in into the income tax portal. You need to download the AIS and you need to see what are the entries. The AIS basically contains all financial transactions that you've done. For example, deposits, remittances, investments, redemptions, cash withdrawal, taxes paid, rent, dividend, everything is pictured over there. And it's a good idea to actually see whether the AIS and your own data is matching, because if it's not, then you also need to look at working towards rectifying the AIS as well. So honestly, all this is quite time consuming. I don't think that it's very easy to do all this. You still have the whole weekend. So if you've not done anything about it, then I think your weekend plans are well charted out right now. You'll have to spend the
cancel all weekend plans and
no going for movies. Yeah, no movies. I know a lot of movies to watch right now, but no movies.
No Barbenheimer, no Rocky, nothing. Just finish your.
Yes, you'll have to sit and figure out how to get all your statements. But yeah, I would say that if you can, please file your returns by 31st of July. And please do consult a CA especially if you're doing RTR too.
Right. Mrin, thank you so much for taking time out. And I know it's a very busy time for people like you. And thank you for talking to Sakshi's viewers and telling them about some last minute hacks and some do's and don'ts with respect to ITR filing. And guys, inka meeru ITR file cheyaledante please ee weekend lo కూర్చుని ముందు ఈ పని చేయండి, ఎందుకంటే 31st July deadline extend avadu and you have to fill it before that. And in case you miss out on the deadline because of any XYZ reason, for that also Mrin has told us the way out. 31st December will be your next hard stop to file your returns, but please do it soonest. And ఏవైనా queries ఉంటే మీరు మాకు పంపించొచ్చు, సాక్షిలో మేము మీకు help చేస్తాం. But ma'am, thanks again for joining in. That's all we have for today.
Thank you, Karunya.